Good morning.
Hey.
Good morning.
Good
morning.
Hey, hopefully everybody's doing well. I want to do the Zoom a little bit different this morning. I'm going to ask that everybody mutes their mics, please. Today, I'm just going to kind of talk to you guys. And, I asked you to bring your pen and paper because you can write your questions down. And we'll cover the question and answers after I go over, everything that I kind of need to cover here. So, as those of you who know, have been with this Discord, since its inception, or shortly thereafter, we've always kind of taught concepts, what an order block is, what imbalances are, things of that nature. We talked pieces. We've never really talked the entire process, right? So, here lately, it seems that, for whatever reason, there's been sort of a breakthrough where more people have kind of understood, it seems to me at least, what we were trying to do. So what I wanted to do is maybe capitalize on that by kind of giving the 10 things that you need to know, and take those 10 things that you need to know, go and find a trade setup, and using those 10 things and kind of foresee what we can expect from that trade setup. And then we will work backwards and go over a trade that we could have caught in the past, okay? So let's talk about those 10 things, just 10 things that you have to know in order to kind of catch these trades. You have to know price action, okay? I know that's a buzzword. I remember when I first heard price action, I was like, yeah, whatever, right? Price action and market structure, in my opinion, are hand in hand. It's kind of like peas and carrots, or, ice cream and cake, milk and cereal. You need both of those. You need to have an understanding of both of those things in order to properly catch your trade setups. And while I talk to you, I'm going to share my screen. We're going to talk about market structure and price action, okay? I think everybody can see my screen set up. Whether you trade smart money concepts, support and resistance, all of the things that I'm going to talk to you about are interchangeable, okay? You call it whatever you want to call it. I'm not here to argue, which system is better. I personally like the smart money system. It allows my charts to be less busy, and I found a level of consistency. So that's the system that I choose to use. But maybe you're a support and resistance person, and that's cool. So you have a level of support across here, right? And I think even if you trade support and resistance, you understand that it's not a straight line. It's a zone, right? So this is a level of support. Price breaks that support and drops, okay? You get a small retest right here of this zone, and then it pulls away. So you could have gotten in on the retest of this zone, right? That green candle. You get in the trade and it sells off, okay? That's called price action. The candles are the price action. The structure, market structure, is this level of support and it breaking the support. So if you understand price action and market structure, that's the first thing you have to have a decent understanding of if you're going to catch trades, okay? The second thing that I list is order blocks, right? I'm a order block guy, smart money concept. If you're not smart money concepts, then you can ignore this piece. But where we got the retest right here, and this next down candle, that created an order block, okay? If you understand this piece as a trader, it's going to allow you to enter a trade based on this order block forming right below the level that it broke. Okay, you get in the trade, you write it down, all that good stuff. So if you understand the order blocks, that's going to assist you in going and finding trades. Okay, the next thing I have is Fibonacci's, discounted price levels, and optimal trade entries. Okay, Fibonacci is not a smart money concept, but it's a accepted practice that the way the market moves is impulse move, pullback, impulse move, pullback. And let's squeeze this in. I'll just drop down to a 4-hour chart so we can better see this. If I'm trading and I can see this move coming down, right? We're going to have an impulse move. We're going to have a pullback. So as a trader, if I'm trading the impulse move, right? If the impulse is from here to here, this pullback, I want to come right to my golden zone. And this pullback comes right to the zone. You could have got in for a trade and you could have rolled this impulse leg, right? You get an impulse move here, you get a pullback. It passed through your zone, it pulls back to the 78.6. The 78.6 is what I'm gonna borrow a term from ITC. This is the optimal trading entry. This is like best case scenario. I mean, there are retracements that go 81, but this is a very good retracement to get in and push to ride this push down. So if you get in right here, you're catching the entire move back down to the bottom, right? So if you understand that you don't want to, if you're selling this market, you don't want to sell at the low. You want to sell when it pulls back, right? You want to sell when it pulls back, right? Even if you're trading this and you hit a sell right here and you go into drawdown, it doesn't matter because the market is going south. Okay, so you want to be able to sell when it pulls back. When it's buying, when the market is buying, you want to throw your sell order in, right? Because anywhere you get in on this up move, eventually is going to turn into a good position, right? Even if you got in at the bottom, right, when it started buying, if you got in for a sell move here, you went to drawdown, and when it impulsed again, now you're in profit. You're break even, you're deeper in profit. So if you understand that, and if you can recognize that, that's thing number 3 that's going to allow you to trade successfully. Fourth thing, and I'm not talking about a level of importance here, but the fourth thing you need to understand is risk management. Because if this is a level of importance, I'll probably have this right up there at the top. You need to understand risk management and how to calculate your risk. Risk management, all right, depending on the account size, you need to be risking, no more than, I would say, 2% of your trade. Now, I'm not the risk police or none of that, but there are wildly successful traders that risk 1%, 2%, right? If you trade a funded account, if you risk 1%, you'll probably never be in jeopardy of violating your account, okay? And if you lose 2 trades in a row, you lost 2%. Just wrap it up for that week. Try again next week. We see fresh setups on the weekend. Every weekend, we never have a problem finding setups. So if you do something that you make a blunder during the weekend where you're down 2%, just get in your demo until the following week. It will, chances are, it'll work out for you. So your risk management and how to calculate it. Let's talk about that for a half a second. We'll use a $10,000 account, right? That's a small FTMO account, whatever funded trader you use. Most of them have a $10,000 account. If you risk 1% of that account, that's $100, right? So you have $100 to spend on the trade idea, right? And number 5 on our list would be how to use the long and short tool. So I'm just going to break it out real fast. that way, we can just kind of tie this together. So obviously this is a down market. I'm just going to put the short tool. I'm going to bring the short tool. I'm going to work with a small number like 100 pips. I'll explain why in a little bit. So let's talk about risk and using your long and short tool. For the most part on this 4-hour chart, I'm placing this at this order block, this doji. Some of you don't call it an order block, but just bear with me if you don't. You know, I've made a lot of money on these, so I'm going to call it what I call it. You call it what you call it. I got a 20 pip stop loss right here. My target is 103 pips. Let's just call it 100 pips. That's a 5% gain. If I win this trade, it's a 5% gain. All right, let's talk about risk. You have a $10,000 account. Risking 1% is $100. That means I'm going to take that $100 and divide it by whatever my stop loss is. In this case, $100 divided by 20 is 4. That's the dollar amount per pip. So my lot size in this case will be a 0.40. All right. For those of you who have to have the zero in front, put 0.4. All right, that's a $4 lot size. You make $4 a pip. This trade goes 100 pips. You made $400. All right, it's a very simple setup. It's a very easy to understand lot size. All right, now watch this.
Say that one more time.
Again, hold your questions to the end, but write them down and we'll talk about them at the end. But I'll go over this one more time. You have risk management here. Risk management. I have a page dedicated to this on our Discord. We talk about how to get your lot sizes and manage risk. I wrote a whole paragraph about it. It's pinned in the funded account. You're going to take your account equity, all right? The equity of your account, you're going to multiply it by 1%, all right? For those of you who don't know, the short math on that is equity times 0.01 will give you the amount that you need to risk. So if you do that, 10,000 times 0.01 is going to give you $100. You can risk $100 on this trade idea. You're going to take the risk amount. You're going to divide it by your stop loss. So if this was a 20 pip stop loss, you're going to take that $100, divide it by 20. 100 divided by 20 is, I said 4 a minute ago, is 5. 100 divided by 20 is 5. So you'll have a $5 lot size. So if this trade goes 100 pips, you've made $500. More importantly, you've made 5%. Okay, you've made 5%. One trade idea. This particular trade idea would have lasted 1, 2, so 8 hours. 2 4-hour candles. Money, you made your money. Okay. Now, if you enter 2 positions, right? If you enter 2 positions on this onset, that means you risk 2%. You're going to make 5% times 2. That's 10%. You're done for the week. 8 hours. You're done for the week. 10%. If you're chasing 10%. This is how you get your percentage goal, by understanding your setups. Okay. If you understand your setups, then you will definitely be able to catch these trades. I apologize about the internet. If the internet breaks up, please somebody come on and say something, okay? So I can repeat it. So if you understand these setups, you understand how this trade will give you 5%. Now, let me show you something different. This is a 4-hour chart. If I go 2 time frames down, I'm gonna skip the 1 hour and go straight to the 15-minute. Right? Oh, where did it go? Come on, bro. Now I've got to find where I was. I apologize, guys. Ah, that burns me. We'll do it closer here. I'm gonna have to get a different position. We're going to use this area because it's close. All right, so I need to go up to the 4 hour. Sorry. We're going to look at this area as your entry on this 4 hour. Get it back up so I can get the same pip count. Let's say in 2021. Okay. All right, so we got a 20 pip stop loss here. Okay, this is on the 4 hour. So if you entered this trade, again, you would have made 5%, right? If we drop down to this 15-minute,
Todd, if you're talking, you went out.
no, I'm not. Can you hear me now? All right, if we drop down to this 15-minute, let me just adjust it a little bit. Your original position is right here. You're in this for a trade. If you look on this 15-minute chart, price goes down and pulls back, right? This is the same concept that we just talked about. Impulse move, pull back to your golden zone. Get you another position. Get you another position. We're not just arbitrarily putting in numbers, but we're trading the same concepts. We're just putting all the concepts together. So you can get you a position right here. I like to do 10 pip stop losses when I do this 15-minute chart, but you don't have to, right? You can do, this is a 9 pip stop loss, right? I'm going to the same place as my original position. I don't have to go any further. It's less of a pip count, right? This trade is only 74 pips because it already moved 25 pips. This trade is 74 pips, but look at my risk reward. I'm going to make 8% in less pips because my stop loss is lighter. You can move this stop loss to entry, so you're risking nothing on this first trade. Now I'm risking 1% on the second trade to make 8%. So I'm going to still make the 5% for my first trade. Now the second trade on the same move, I'm going to make 8%. 5 and 8 is 13%. One trade, 13%, you're done, right? Now, I use a hedge. Please learn to hedge, because when this thing comes back, it goes down, and when it comes back up here, well, actually, you're done because this does hit your TP. So you're done. But just say this trade comes back up, and if you use a stop loss, this takes you out the trade, even though your trade idea is valid. So learn to use your hedge. Learn to use your hedge. Okay. I'm sure I have plenty of questions on that, but that's a an argument or a point for a later day, but I want 34 people to know who are on this Zoom call that I just showed you. I just showed you how you can make 13% every week. You can do this 5 times a week, but this is every week you can make your percentage. This is over 10%. One trade I did that went 100 freaking pips. Every week, I want y'all to understand that I've identified trades that go hundreds and hundreds of pips. This is a 100 freaking pip move. You don't even have to stay in for the whole move. You could have rolled this thing down. I'm not even asking you to hold your trade that far. I'm just saying, get in this trade for 100 freaking pips. 2 positions, over 10%, wash, rinse, repeat, you're welcome. It's a gem. You know, I mean, if you're not making the percentage, look into doing this, okay? So I went off on a tangent, so we're gonna recap. Top 10 things you need to know to take the trade. Price action, right? Got to understand what price action is, what good price action is versus bad price action. You have to understand order blocks, right? Need to understand Fibonacci, how to use it, right? What the discounted rate is, 50% or higher. Also what the optimal trade entry is, a 78.6. You have to understand risk management. That's number 4. We just covered risk management and how to calculate your stop loss and all that stuff. Risking the right percentage on your trade, right? If you guys have to risk more than 1%, I think that that's foolish. I think I just showed you that you can risk 1% and you can make 13%. This is one trade I did. You can do this every day of the week, every freaking day of the week. If you made 13% a day or 10% a day on a $10,000 account, you have $1 million probably in 6 months. I haven't done the math, but trust me, 10% every day of the week, $1 million comes very, very fast, right? Because your $10,000 account eventually gets to 100,000. I think it's 25 iterations. So in 25 days, in less than a month, your $10,000 account. Correct me if I'm wrong on that spreadsheet, Selena, but I think it's 25 iterations of getting 10% takes you from 10,000 to 100,000.
That's correct.
Okay, so this compounds from there. Trust me, if you don't believe me, Selena will send you the spreadsheet. So this is available to you. So if you understand risk management and how to calculate it, it's going to help you out. You have to know how to use these long and short tools, because these long and short tools keep you honest. It lets you understand what the percentage is. It gives you the exact place that it needs to go and all that good stuff. So use your long and short tool. You don't have to make this stuff up. Once the trade is running, you are just here to manage your trade. That doesn't mean take yourself out the trade. You have 2 criteria that takes you out the trade. You have a stop loss, you have a take profit. We don't need you in here tinkering and tunkering, leave it the heck alone, let it run. Now, if your hedge gets picked up, that's the only time you got to get active. Now you have to decide when to cut this hedge. This would have been very simple. If your hedge had picked up here, it's going right down. Now you just starting to cut your hedge off. It's a straight drop. This one candle, it dropped this far in 15 freaking minutes. So if you could have caught this trade right here, let's say this was your entry. If you caught this trade, man, one candle, you made over 100 pips. I mean, but the point is, don't mess with your trade. Don't tell me I took myself out the trade. I don't want to hear that crap. Don't take yourself out the trade. Stop loss takes you out. Take profit takes you out. Enjoy your success. Allow yourself to be successful. Okay, number 6. Got to understand how to use your time frame. And we've done this, and I just didn't mention it. So this trade idea started off on the weekly. That's how we identify what pair we're going to use, because it either had a bearish or bullish order block. You don't believe me? Let's look at it on the weekly. Here's a bearish order block right here. So the example I was using is somewhere over here, right here. But the point is, bearish order block, the trade starts moving down. All you needed was 100 pips to catch everything I just showed you. But you understand the time frame. We're only looking at this because we had a weekly order block, just like this week or this past week, we had a weekly order block. We said we expected it to push up and then sell down. It didn't do both last week. It just pushed up, which gives us a beautiful opportunity this week to sell it down. But I don't want to get beside myself. We understand that if we see the setup on this time frame, we got to drop down 2 time frames. We got to skip the daily, drop to the 4 hour for our entry. That's why we were on the 4 hour for that initial entry. That's why we had this set up on that 4 hour. Once we got our entry on the 4 hour, it moved down, and there was another setup when it pulled back. It was another setup. We just had to drop down 2 time frames, which was the 15-minute, to get that second position. So by doing that, by understanding how to do that, we were able to get 2 positions into 1 trade that went 100 pips, and it was able to pay us out our over 10%, right? 10% is my personal goal, right? But if you go and tell somebody that you know how to make 10% a week, they're going to look at you like you're smoking crack, because nobody in America is making 10% a week. So what I'm telling you is, this is your opportunity to see it and understand it and then execute it. You know, I mean, we do this every week. All right. So number 6 is how to use your time frames. I just explained that. Number 7, how to use moving averages. Okay. And here's why I say you need to understand how to use moving averages. We all are flawed, right? We all get caught up and we're prisoners of the moment. Like, we see that this is a downtrend, but most of us as new traders, we're scared to get in here. We think that when we get in here, the trend is going to change. But if you look at these moving averages, as this thing is dropping, price goes to the moving average, it falls. It goes to the moving average, it falls. It goes to the moving average, it falls. To the moving average, it falls. Now you get the crossover. But before you get the crossover, you get the bullish order block, right? You get the crossover. So if you use these moving averages, you're going to be safe, right? So if you drop down, if you're on this 4-hour chart and you're looking for a trade idea, right? I'm going to show you with NJ a trade idea that I caught the other night just by doing this. When you see price push back up to the moving average, it's game time, man. Even if you entered this trade right here and it picks up your hedge, you go and draw down, you know it's coming back down. So if you get in this trade at the moving average, you're marking yourself pretty much safe. It's going to push down. Just give it a minute. It's not going to change because you're here or you're in it. The weekly order block told you that this trade was pushing down. So you have an idea of how far this trade is pushing down. Let me show you something. This is a weekly chart. Bearish order block, price pushes up. We know it's pushing down. How far is it pushing down, Todd, and how do we know? Okay. I showed y'all how to use a Fibonacci. I'm going to go up a time frame because this is what I do. I hang out at these higher time frames. I know y'all don't believe in these higher time frames. So a few months ago, this price pushed deep. From this impulse move back up to test the moving average. That's all the price did, was it came right back up. It tested this moving average. It's probably over, I don't know, 1,000, 1,000 pip move right here, 1,500 pips. So price is down here. Look to the right. This is $1.40.99 right over here. This push up right here to price get here's $1.57. That's 1,700 pips, man. So all I'm waiting for is for price to pull back to my golden zone, right? I'm looking for a reaction from this moving average, price to pull back to my golden zone. If I look at the weekly, it's giving me a bearish order block. I know it's at the moving average. If this week, if price pushes down, then my expectation will be proven correct, right? Now, it's a good chance that this week starts and it goes up. If it goes up, then my case study will be changed. My bias will change. But I'm pretty sure that we're going to get this down push. And it will at least close to this wick already told us where the market has the potential to go. So you can at least trade it to this wick, maybe even to this golden zone. Let me show you something on the daily. All right, on the daily, this is time frame confluence. All I do is understand my time frames. This all goes back to time frame and understanding how to use them. If I go to this daily chart, whether you're a head and shoulders trader, there's a shoulder, there's a head, here's a shoulder over here. We're just waiting for the drop, right? The head and shoulders is set up. All we need to see is a drop. If you're a chalk, a change of character trader, all right, I put a line up top, I put a line up bottom. Basically, market comes up and gives you a high right here. It comes down, it gives you a low. Now we break this high. The market immediately comes down and breaks the low. If it breaks the high and then breaks the low, you can expect it to come back up to the area, the last up candle, which it is now, and then it's going to fall. That's chalk. So where is it going to fall to? I can take it right here with confidence to this wick. But me, as somebody who understands price and where it needs to go, there is a area right here. You know, Alicia, you supply and demand people. It can go down here. There's an imbalance right here. If it comes way down here, it might as well feel this imbalance. Y'all see this imbalance. I ain't making this up. But anyway, price can come right to this level, right? And on the weekly, I think that is a zone right there on the weekly. Order block, boom. So there's the zone right here. You can come right there. It'll give you a higher low, right? Because I believe market is still going to push up. We just getting the pullback. And then if it gives you a higher low here, if you look at this Fibonacci reading, price comes up, it hits your golden zone. Most people who trade Fibonacci will tell you you can take price to the -27 extension, which would bring it right here, right? So price is going to come down, then price will go up and eventually get to this level. I believe it. That's another zone. There's an order block right there. So this is my thought process, and this is what I see. Of course, it's a longer range because I'm on a higher time frame. But now that I'm armed with that knowledge, I'm able to drop down, you know, to the weekly, look at the daily to get my confluence. I see the chalk on the daily, which tells me that we're going to get a drop, which the weekly already said we were going bearish right here. The daily shows me the actual chalk. So now I'm just going to get on the 4-hour and wait for that 4-hour bearish OB. That 4-hour bearish order block will be the catalyst for me to hop in with a position and then drop down to what? The 15-minute and get my second position. Now, when I get my position on the second position here, I only showed you guys the move in 100 pips. Now, mind you, you can sit in this trade once it starts cooking. You can cook all week with the trade if you're able to hold a trade, you know, but y'all act like y'all can't hold a trade. But let's just say you want to stay in at 245 pips versus the 100 pips. Well, stay in it, but just understand that you're going to get some pullback, right? You're going to go immediately into profit. You're going to get a pullback. Instead of freaking out about it, instead of, you know, crapping your britches, drop down, get you another position. And if you're a smart person, get you two. Move your original position to break even. Open 2 positions on the 15-minute chart. So instead of catching that 100 pip move and getting 13%, maybe you catch the 245 and get 45%, right? It happens every week. And if you understand the things that I just laid out for you, and that we've only covered the top 7, if you understand those 7 things that I just laid out to you, you have the ability to make whatever percent that you choose, not my percentage, but whatever percent you choose, because it's going to unfold exactly like this on the way down, right? That's how it's going to unfold. Number 7, again, was the moving average. Understand your moving averages, right? The reason why I use the 9 and the 13, I've done a video about this, so go watch it. I use the 9 and 13 because when these pairs create that order block for either the drop or the rise, you're going to need a 9 and 13, because generally speaking, that's going to be the moving averages that you need on these drops and rises. Every time it touches, you got an impulse move, it pulls back. Once you get that red candle, it gets closer to the moving average, you can add a position. It goes up, it pulls back, add a position. That's how you trade the moving averages. So that was number 7. Understand how to use the moving averages. I got a video on it. You can watch it. Okay. Number 8, we got to understand the news, man. We cover news here. So if you don't understand the news, tune in, bro. Like this is a recorded call. So even if you can't catch this live, always watch the playback so you can understand like some of the news events and what we're expecting. Now, it doesn't mean that it's going to come to fruition. Sometimes we expect things and the market does opposite. I'm cool with that. I won't complain because I have a buy and sell button. I can either buy it or sell it, right? Right. This trade setup is I'm biased for the sell. If trade comes in here and it goes up, only thing I'll do is I'm gonna flip and buy it up. I'm going to look to the side because I understand market structure. We talked about price action, market structure. I understand structure. So I need to look and find out where price is going. Like if price keeps going to the top, it's obviously going to run these highs. So instead of me trading the lows, now I can just trade the highs, right? And I can do the same thing with 100 pip increments to the top side. If you get a bullish order block on this 4-hour, stretch it out 100 pips, ride it to the top, okay? So the news was number 8. Number 9, do yourself a favor, man. Learn how to hedge. It might be a little bit uncomfortable for you. That's cool. That's fine. You learn how to hedge is going to save yourself, a lot of trades, a lot of heartache. Get in there and practice on a demo. I can't stress that enough, man. Demo accounts are great for some things. Learn how to hedge, because if my hedge gets picked up, I still have a chance to recover. Whereas if your stop loss gets hit, your 1% is gone, right? There have been multiple trades that I would have lost if I didn't hedge, right? The hedge picked up, it went a little bit higher or a little bit lower than I thought. It just picked my position up. And once the trade started going in the direction that it was supposed to go, all I had to do was cut that hedge off. And there are 1,000 different ways to cut the hedge off, right? But once you understand where the market is going, like if I expect the market to come here and it gives me a 4-hour bearish order block and then it bounces up higher, once it eventually starts selling, I can cut that buy order off. And now I'm in profit. Whereas if it does that to you, you're just going to be out of 1%. You can always find a new entry in a new position, but you'll never be able to recover that 1%. Whereas I never lost the 1%. I went and draw down 1%, but once trades started coming my direction, now I'm cutting off the hedge and making money. Okay. So that's number 9, learn how to hedge. Last thing you need to know, you got to understand when the trade is over. Because if you don't have an off switch, you're just going to trade until you're done. Understand when the trade is over. Okay. My dad used to say something to me. We used to trade the stock market. He used to be like, hey man, you're never going to catch the entire move. You're not going to catch the very beginning, and you're not going to catch the very end, right? Like when this trade turns around, I'm not going to be in the trade at the very top. And when it finishes, I'm not going to be in the trade at the very bottom. I'm going to get out of the trade at some point on the way down, right? Whether it's here, here, or here, I'm out of the trade, but the trade is going to keep going. So you have to have an understanding of when you're out of the trade, okay? It's no different. When you're losing, you have to have, okay, you cut yourself off at 1%. When you're winning, you have to have a cutoff. I have a percentage. I chase 10%, I'm done. A lot of times it's 13%. You see the numbers, like it's very hard to get exactly 10%. So if you put 2 positions in this trade and you hold it until it hits your take profit, then you've made, I don't know, about close to 18% on this trade. So unless you wake up or you come and check your phone and the trade is down here and you know you've passed your 10%, you manually get out of the trade, that's cool because you've reached your goal. But most of the time, you're going to let your trade run. It's going to run those 100 pips and you might make 14%. So you have to say as a trader, man, that was probably the easiest 14% I made. It only took 100 pips. It only took a day and a half. It only took a 4-hour candle, whatever the case may be. But now you have to be able to hit that off switch until next week's setup, right? Because if you don't, now you're going to take what you made back to the market and give it away. You're not going to win more the more trade setups that you take, right? Unless you're an absolute professional. You're going to lose more. So unless you understand how to go and find these setups, because there is a bunch. And this week, whenever we get if y'all saw Selena's email about our order blocks, it's probably 1, 2, 3. It's probably about 10 different order blocks. So you're going to be able to capitalize. I know I got GBP CAD pulled up, but I can do the same thing in AUD JPY. This is going to be a beautiful setup, man. NZD JPY, I made a little money on that the other night. All of these setups are going to give us the exact same opportunity, right? This is going to sell. You got a double top structure. You got a higher high. This high didn't break that high. It gives you a bearish move. We're going down. Where are we going, Ty? We're going all the way down here. We're going down here. Now, it might not be 1 weekly candle. Maybe it's 2 weeks that it takes, but that's still 405 pips. All you need is 100. I guarantee you this week we're going to hit this bottom. We coming right here. The first move is going to be up, right? Once it pulls up, I got my zone marked up. If we turn right here where I think the market is going to turn, that's 169 pips. Oh, Todd, we got to use a 67 pip stop loss. If you know what I know, you'll use that 67 pip stop loss, because as soon as that market gives you that bearish order block on the 4-hour, right? On the 4-hour, as soon as it gives you this bearish order block, there's a bearish order block right there. So it might just come and tap in. But as soon as you get that bearish order block, you're going to drop down to that 15-minute and wait for that second bearish order block on that 15-minute. And you're going to set your trade up from here. And this second position will be the one that pays you the most, right? So if you listen to this call in its entirety, a smart trader would get in this first position. And once this second position presented itself, you could move this first position to break even, and you can open up 2% on this. You can have 2 positions on the second one. So maybe it's a 1 to 8 on this second move. So now you have the opportunity to make 16% with these two new positions, and that 3% from that initial position. That's all up to you as a trader. I'm not going to be there holding your hand, but if you understand the concept that I've laid out for you, then you have the opportunity to turn this into gross gains every freaking week, every week. So you have these 10 things. Let me give you the list of 10 again. All right. Price action, market structure, order blocks. Fibonacci, understand the discounted rate on the Fibonacci. It starts at 50%, 61, and the 78.6, right? Risk management, understand how to manage your risk. Only risk 1 to 2% of your equity. Understand how to calculate that, right? How to use your long and short position tool, right? This will tell you everything you need to know. It'll give you all the information about how many percent you can expect, where you can get in and out of your trades, all that good stuff, and allow your trades to run. Managing your trade just means cutting off your hedge, right? So, number 6, understand how to use your time frames. If your setup is on a weekly, 2 time frames down is a 4-hour for your entry. Once you get that 4-hour entry, you can drop 2 more time frames down to the 15-minute and get a second entry. Understand how to use those time frames. I showed you how I use those time frames in my analysis by dropping from or going up to the monthly looking and then dropping all the way down. I showed you that. So understand how to use your time frame. Understand how to use your moving averages, right? There's power in these moving averages. If you look on this downtrend, the trade is hitting the moving average. Then when it switches over on the uptrend, the trade is hitting your moving average. That happens every week, guys, and you can use it. If you use nothing but moving averages, every time this price hit the moving average, you got an entry here, another entry here. That's 3 entries. You could have took it all the way up here. You'd have cashed out. You'd have made a lot of percentages, right through here. That same 100 pip move or whatever this, how many pip cap. That's 50 or 60 pips. You'd have made a lot of money. Understand how to use your moving averages. Understand the news that's coming out. If you don't know, ask questions. Learn how to hedge. It's only going to help you out in the future. Then understand when the trade is over. When you've made your percentage, even though the trade is still going to run, don't be the greedy guy or greedy gal. You lose all your profits because you're trying to hold to the very end. You're never going to make it to the very end. Okay. All right. Now, those are the top 10 things that you need to know. All right. Now, in the next 10 minutes or so, I'm going to try to wrap all that stuff up I told you into going and picking out your trade setups. So, since I'm already on NJ, I'm just going to go to the weekly chart here. Okay. Everything for me starts with a weekly order block. If you don't have a weekly order block, I'm not interested. You know, it's so many, so many great things happen for me on this weekly order block, right? There's one exception to what I just told you about a weekly order block, and I'll show you that on this UJ, okay? If you don't have a weekly order block, the only way I'm going to ever be interested in the trade is if you can show me where you've moved an insane amount of pips. This trade last week moved 772 freaking pips. It moved because of the news. The news shot the price down. You know, the CPI report was less than expected. That means inflation was shorter, or it was less than expected. So we got this massive move to the downside. Anytime you have a move this 700 pips, and you understand price action, right? This goes back to the very first thing you need to understand. You understand price action. I understand that most of the time when you get a candle, you're going to get a retracement, right? So if you follow, you got this green candle, you get this red candle retracement. It just so happened it retraced the entire candle. After this red candle, you got this retracement, right? You see the wick on this candle, that's a retracement. Then price pushed down. Then you get this retracement on this green candle. Then price pushed down, it already retraced. Now you get this retracement, right? Or I'm sorry, you get this, the green candle goes over, you get a retracement back this way. Now the red candle, you get a retracement up this way. Now the green candle, you get a retracement first, and then the candle moves up. Here's a candle you don't get a retracement. Every now and then, you get a candle where you don't get a retracement. But I'm betting on a retracement every freaking time. Because on this example I showed you, we got 1, 2, 3, 4, 5, 6 retracements before we got a candle with no retracement. I'm betting on retracement here. And when it does retrace, I don't have to, like, this is the golden zone. All I did was fib from the top of this candle to the bottom. Let me fib it while you're here. You don't think I made it up. Bam, bam. I just fibbed the direction of the candle. My golden zone is right here. You see that? Let me delete this other fib. My golden zone is right here. So that tells me, because I understand price action, I understand fibs, and I understand that nobody wants to play unless price gets to the discounted zone. So I understand we need to see a retracement before it drops again. That's what I'm thinking. That's my thought process. Now, as a matter of confluence, I'm going to use this moving average. Price broke the moving average. This moving average serves as structure a little bit. So I want to retest the moving average. That would line up with this thing retracing up here, right? How far does it need to go up? Jeez, 431 pips. I just showed you how to get your money in 100 pips. You can you can quadruple that money. I'm not going to be there with you for 431 pips. I ain't going to lie to you. I'm going to get my money out and I'm quitting. That's just what I do. So if you line your trades up, right? What does that mean? That means, Todd, we got to drop down 2 time frames. Everybody should be on this same boat. We got to drop down 2 time frames. What are we waiting on, Todd? We waiting on a bullish order block, right? This first candle, when it opens up, this first 4-hour candle will probably be your bullish order block. You don't have to catch every pip. You don't have to worry about jumping in right now. Wait until you get this bullish order block. This next candle is probably going to retrace and let you in. You get your initial entry. You set up your long and short tool right here, right? You got plenty of time after this bullish order block to do your little calculations, which means your 1% risk. You understand that's a 62 pip stop loss, right? This is 182 pips, which is plenty. If you do it like I told you, you don't even got to look at 182 pips. You can look at 100 pips, right? You can set it up like this. And you'll be like, man, that's only a 1 to 6. I don't give a darn. Because once you get your bullish order block, you dropping down to the 15-minute, right? And when you get down here to a 15-minute, believe you me, whatever bullish order block you get from anywhere in here, you can use, and you're going to get about a 10 pip stop loss. And it's going to be a 10 pip stop loss until the top. This is 100 pips. That's, if you get a 10 pip stop loss that goes 100 pips, y'all know that's 10% right there. So let's just say you get it right here. It's going to shorten up you can either stretch this out to 100 pips from your 10 pip stop loss. That'll give you 10%. Or you can work with the little 8% and put 2 positions in. Or you can stretch it out 100 pips and you can still chase 10% on both of these positions. Believe you me, you're going to see it. It's going to happen. It has happened every freaking week this year. It ain't going to stop because you're looking for it this week. It's going to happen. So that trade setup will happen. And here's the kicker, guys. This trade setup is probably going to happen like now, like tomorrow. You'll be done trading Monday. You know, we wake up Monday, it's a wrap. Now you got to wait the rest of the week with no trades, right? But there are all these order blocks that are going to be playing out all over the week. So a very skilled trader would take this trade and then they look for another trade setup to materialize later on in the week. I'm not asking you to do that. All I'm trying to get you guys to do is recognize one of these trade setups. You can make 10% every week. That means you can pass any challenge. That means you can abide by any challenge rules. You can work those challenge accounts so you can make 10%. You can open up a 100K account. You can pass a challenge in 2 weeks with 2 of these moves, right? And then 4 weeks later, you can get a payout, 100K account, 10% a week is $10,000 every week. 40 racks every month. Probably going to be over that because you just see it's hard to get 10% on the head. Most of the time you're going to get 13%, that's 13 grand. 14%, that's 14 grand. These things snowball. This is a rudimentary way of me showing you how this stuff unfolds. Now, let's back test it. I just showed you how I'll go and pick my trade setups. Let's go back to the weekly. This trade setup is based off of the pip count from this weekly candle. There are 1,000 different candles. You know, you pick your size, however you pick your size. But if it moves 700 pips, I'm on it. 500 pips, I'm still trading it, right? Anything that moves 300 pips or more, I'm always looking for a retracement. Okay. GU is a great trade too. And the thing I love about this GU trade is it's an order block. It's going to pull back, right? It's going to pull back. The pullback zone is going to test the moving average. Everything just lines up. See how this stuff is beautiful? It's confluence, right? So how far did GU move this week? Does anybody know? Bueller. 456 pips. This pullback is awesome too. It's awesome. You can get whatever you need out of this pullback. Then you could turn around and trade this something going up. You know what I'm saying? So all of this stuff is available. If you mess this up this week, I'm not going to beat you up, man. You know, but practice. All of these moves are going to happen. Go back and rewatch the video. Watch it while you're setting up your trade. I don't care. But get yourself a couple of positions in your trade and trust the process. You have to be able to trust the trade that's going to go. Don't worry. Don't be going down to the 15 freaking minute order block. I want to cuss, but don't go down to the 15-minute order block while your trade is running and be calling out, oh, it's a bearish order block. Nobody cares, dummy. It's going to play out. It's going to go up. It's going to pull back. It's going to go up, pull back, go up, pull back. Don't worry about those bearish moves. It's part of the process. Okay? And don't take dummy literally, but I just want you to get out of your own way, right? Allow the trade to take place. Allow it to hit your take profit because it's going to hit every one of your take profits. There's 1,000 different order blocks. Choose one, right? Now, all right, the trade setup, what I expect, those are all perfect scenarios, right? Hopefully you guys have people that you lean on, you know, when you trade, you can call and they can talk you off a ledge. Because all trading is you seeing a move or you anticipating a move and you placing a position, right, for that move. So allow yourself to see the benefits of your hard work. Everybody sees on this weekly chart that this thing is going up. Why do we think it's going to change just because we put a position in? It doesn't work like that, man. It's going to keep going up. So please take the trade setup, right? Take it up, trade it both ways. Don't tell me, oh, Ty, you know, I don't trade this or look, man, if you're not making 10%, just be quiet and listen. Listen, take the trade setup, test it out, put in a demo if you don't believe me, test it out, right? It's going to work. So, Selena, you on the call? Yeah,
I'm
okay.
here.
So look, give me an order block from last week. I want to back test.
I'm on an order block from last week.
Yeah.
No
matter what.
You don't want to do GN since we talked about it all week?
I mean, we can do GN. I'll do GN. That's cool.
I mean, I can give you another one, GA, GC.
Let's do GN. All right. Well, you know, why you pick this one? This is very, very interesting. And man, I'm glad you picked this. Okay. So first of all, I'm going to show everybody something. I'm going to hit replay mode for GN and go back 2 weeks. Does this look familiar to anybody? This setup right here. If I go to GCAD this week, this is GCAD setup this week. Bearish order block, green candle up. I go to GN. and I replay this for 2 weeks. Bearish order block, green candle going up. Bruh, do y'all see that?
Yes.
We didn't know if we could talk now or not. So that's what I'm about to say.
Yeah, y'all can't talk. Mute yourself. But anyway, so look, man. I mean, this candle drop on GN was amazing, right? And I'm not trying to suggest that we're going to get the same thing from GC. We are going to get a drop, but this candle drop was 700 pips, 800 pips that week. Oh, you know, I don't know about y'all, but I remember telling God, man, if I had a chance to do it again. And look at God. Well, look what God did, man. He gave us a chance to do it again, man. Sometimes you got to be careful what you ask for, because the man upstairs will throw it in your face. So if we get this drop again, this is 691. That's a lot of pips, is what I'm saying. The setup again for the second time is in our face. There are a little, you know, I guess the most meaningful difference for me, if I look at this GN setup, is that the moving averages were further down, right? It didn't matter. It still busted through the moving average, right? And then this week it tested, which is a sign that it's going to push down. But if I look at GCAD, we're sitting on the moving average. I do believe we're going to get a bust through the moving average. And I told you why. And I looked at the higher time frames. You know, I believe eventually this thing will push up. I just believe that this is a retracement. You don't have to be there for the 700, 800 pips, but it just looks very familiar to me. Okay, so let's talk about the move last week. Let's back test the bull crap that I've told you, right? The lies that I've given you over this last hour. So last week, this is what we looked at. We all missed this move, me included. I missed it. I'm not mad because I made my 10%, but this is a massive move that everybody on this call missed. Nobody saw this 800 pip drop coming. But what I did say on the last week's call is we're going to get that retracement. I marked out my zone where I thought the price was coming to. And what I said was, just like I'm telling you this week, I don't need to get 400 pips. Give me 100, right? I don't need to get 400 pips. Give me 100. So what I was anticipating last week was a push up. Now, I got some beef and grief from a few people because this is a bullish order block. And I'm like, hey, man, that's last week's bullish order block. I ain't playing with that. I want to see new confirmations, right? You know, but technically, I guess you could have dropped down to the 15-minute and got you an entry, but it wouldn't have mattered because you couldn't enter this trade. If you all understand, when the market opens, GN has the worst spread. Last week when I saw a GN spread, it was over 1,000 points. You can't get in that trade with 1,000 points. You might blow your account. But what I did, this is what I did. I dropped down to the 1 hour time frame. Why 1 hour, Todd? Because the market is going to move for that first hour. I need to see what's going on, right? The market is going to move that first hour. Guess what happened that first hour? You get this explosive diarrhea move to the upside. That's crazy. That's crazy, but it's beautiful, right? Because in that first hour, the market gives you its intention. You know, I intend to go up 113 pips and keep pushing. We already know that that's a good sign that it's going to push up to our zone, right? But you can't enter the market at the top. You got to wait for it to pull back. So all I did, right, was throw a fib on it. Why a fib, Todd? Because I believe in them jokers, right? Alicia showed me that. Them fib, they'll pay you that money if you let them. Okay, so on this Fibonacci, I'm measuring the same direction that the candle moved. I want to see a pullback to my golden zone, right? But ideally, I want to get the pullback to the 78.6, which is my optimal trading entry, because it's ICT's optimal trading entry. So we just hit play. Bam. Okay. This allows me to get in, right? I got in. This was a little bit further because it didn't pick up my hedge. I had a 20 pip stop loss, so maybe I'm a little bit high. I had a 20 pip stop loss. It put me in a trade. I went and draw down maybe 18 pips. I don't freaking remember. I just knew I was in there. I was happy. And I just needed 100 pips. I think I had my thing at like 149 pips, maybe. Right? I don't care because I knew I was getting out at my 10%. So at this point, I was in the trade. Now I know I showed y'all about the 4-hour chart, all right? But there's 1,000 different ways to skin a cat. You're not me, so I don't want you to worry about that. I'm in the trade, okay? What I needed to do now that I'm in the trade and in profit, I needed to find another entry, okay? So all in this move, right? It went back up here and it pulled back and it gave me another bullish order block. And I don't want you to be me because this got me in trouble on this trade, right? So I picked up another entry right here. My trouble and your trouble is two different things. Like, so now I'm in the trade for 2 entries. My hedge is right here. I want you to see something. It's going to come back. Bang. It's going to bang me. My hedge is activated. I'm in drawdown. I'm hedged in. I'm not tripping because I'm just waiting. I already know what's going to happen, but I can't do anything. I can't break my hedge until we break back to the upside, right? I can't get out. Now I can get out of my hedge. Now that this thing, see how we break to the upside here? I can start cutting my hedge. And that's all I did. I started cutting my hedge. And I'm out of my hedge totally by this point. And you can see the price, wham, take profit, right? I didn't even let it hit take profit. Somewhere up in here, when I was, I don't know, 100 and some pips in profit, I was over 10%, like 13%. I just closed my trade out, right? It was a wrap for me. That's a back test of what I just showed you. The only difference is I didn't enter this particular trade on a 4-hour order block. And I'm going to tell you why. It's because I was watching on that 1 hour for the break and retest. But I want you to see it on this 4-hour, right? So if you're waited to get in this trade until right here, you waited to get in this trade until right here. Let me see. We're going to need another. Okay. So let's say you got in after you get this 4-hour order block. Let's say you get in this trade up here and you're chasing your 100 pips. You got 100 pips. Let's say your stop loss is, it's not going to be 40. Let's, wherever your stop loss is. Mine would have been 20 because I use a hedge, but I don't know where yours would have been. Let's just throw the fib on this candle. If you had waited for the price to come down here, you'd never enter. So we're going to pretend that you got in this trade up here. The next candle is what I would say. We'll just say you hopped in the trade at the beginning of that candle. You got a 35 pip stop loss. Chasing this 100 pips. You got one position, that one position is going to be a 3-to-1. That's not a bad position, right? 3-to-1 trade on this first position. You're in the trade, right? Okay. Before you really even get in the profit, you get another 15 minutes. So let's just say you're not comfortable taking this trade at this juncture. You're not comfortable adding a position here. I would have been, but maybe you're not. You got a double bottom here. You know it's going up. The intentions are going up. You would have needed to get in this trade when it broke this high. So let's just say you get in right here. Even though this stop loss would be 6 pips, just use 10. 10 is cool. The take profit is the same level as the other take profit, which is this is only 67 pip trade. Your first position on the 4-hour chart would have paid you 3.22%. So add this up, 3.22% on your first trade. Your second trade would have paid you 6.8%. How many percent is that? $3.22 plus 6.8, 10.02. Mic freaking drop every freaking week. Every week. Every week. So don't tell me how you scared to hold a trade. Don't tell me nothing. Just hit me up when you've done it and it worked, or hit me up when you've done it and it's failed. Because if it fails for you, it just means that just tells me you don't know what the hell you're doing. And that's cool. It's going to happen. Like the execution part of trading takes practice too. But what I just showed you in this last hour and 15 minutes is all you will ever need to see trading. A lot of trading videos show you things. They show you order blocks. They show you imbalances. They show you how to use a Fibonacci. What I just showed you is how to make 10% on a trade every week for the rest of your freaking life. So I'm going to open this thing up for questions. I'm going to end this first part of this video because I don't even need questions, really. I told you everything that you need to know. I told you the top 10 things. I showed you how I use those things to find my trade setups. And I showed you how I get in and out of a position. We back tested it. So for the video that I'm dropping on this, I'm just going to use this portion as that video. I can use the question and answer portion. As a matter of fact, I'll just let it run. Do you guys have any questions over anything that you just heard? Now's the time. I got time today.
Hey, Todd, do you take questions or do you just get all the way out?
I'm not taking a portion. No, I take the full portion of my 10%. Listen, if I wake up, because a lot of these trades, you trade these G pairs, they're going to happen in the middle of the night. I get up at the order block. Like I get up at the close of the 4-hour candle to see if it's going to give me my order block. And then I'll stay up if it gives me my order block until I get my 15-minute second entry, and I'm going to sleep. And when I wake up, if I wake up and I look at my computer and I'm up, and it's over my 10% threshold, I'll close my trade out. So I don't take portions. No, there's no need for me to take a portion when you're going to give me the whole thing. It's going to give you the whole thing. Don't take a portion of what's yours. Take all of it.
And you don't never trail, right?
Trailing is going to get you clipped.
Right.
Why do you need to trail? So Alicia, on the lower time frames, I understand why you would trail. But I want you to understand that we're we're talking about something. We anticipated a move that was going to be 400 pips, right? Even though this didn't even go 400 pips. This move didn't go 400 pips. This move went 331 pips. You had 331 pips to collect 100. Let's say you fell a little bit short and you got 8%. Selena has a list of at least 6 other order blocks that you could have found later on in the week. That's how I even I found NJ. I traded this NJ in my demo and made 10% in my demo after I made 10% on Tuesday. I mean, on Monday, right? This NJ trade, this candle right here on Thursday or Friday, on Friday, I made over 10% on this, just on this trading this down. So it's there for us. Like, I want y'all to understand the opportunity that we're trading on Monday is a retracement. The real move is the actual order block move. And even though they don't happen, sometimes they don't happen all in the same week. Like some weeks you just have the up move and the next week you get the down move. But if you look at these other order blocks that you have marked, you can follow this. I can follow this move, this down move, and this kind of later. This is going to happen later on in the week. The thing that's going to happen first this week would be this UJ move. The UJ retracement is going to happen immediately. It might take a couple of days for NJ to start selling. It's going to retrace too. It might hang out here until Tuesday, Monday night before it starts selling. UJ is going to start buying immediately. So I'm gonna trade my UJ at the beginning of the week, right? I will probably make my 10% the first day, right? And then I can focus. Let's say I make 8% and it doesn't work out for me. Well, NJ, all I need to make is is a 2% move. I'm going to trade 100 pips and I'll get whatever percent I need. I'm done. Does that make sense? You don't have to be scared because it's this week, these higher order blocks tell you it's going to sell hundreds of pips. The 4-hour order block is going to give you 100 pips. What is the weekly going to give you? You know what I'm saying? You're going to get your pip count.
Todd, I have a question. You say you wait for, well, I'll set alarms on the 4-hour order block. After I see the order block and it's an order block that I'm looking for, whether bearish or bullish, do I immediately enter? I just set up my say I'm looking for a buy, it made a bullish order block. I just, at the close of the 4-hour candle, I enter the trade.
I do.
Wait for like a little retracement to get a better entry and then go.
That's up to you as a trader. I hedge, so I have more flexibility. And really, if I'm being 100% transparent with you, it really depends on where we are, you know. So when I drop down to this 4-hour, if it's a scenario like this, I'm not waiting for that thing to retrace back to me. I'm going to enter right here because I can't trust that price is going to retrace. It's a downtrend, you know, like it gives you this order block. This didn't come back up and test. This just fell. Eventually it comes back up, but I'm not waiting because I'm going to sleep, right? I have my hedge set. I'm not worried about if the move is going to happen. It's not an if, it's a when, right? So if you enter this move right here, trying to get 100 pips, let's just count the 100 pips. If you enter this move, just for grins, trying to get here, you're not going to get there till 1, 2, 3, 16 hours. 16 hours later, it gets to your take profit. What happens in between that 16 hours, I don't care. I have a hedge trade set that I have to check my phone to make sure it doesn't pick my hedge up. And if it does, I got to get out of my hedge. But I know that I'm guaranteed the 100 pips. I don't worry about that. What I worry about is managing my trade. Like I get in the trade, now I have to worry about getting my second position. Once I get my second position, I'm good. I'm not taking myself out the trade. If I take myself out the trade, it's going to be because I'm in the green over my 10%. Any questions? Any more questions? We got 32 people on here. Something tell me somebody lying. So everybody understands what they just said.
I have a
Tosh.
question.
And I have a
wanna-
question. Go ahead, Tosh.
Oh, thank you. So for your hedge, how do you set your price to put it in as like your
So how
like
do I set my lot size for my hedge?
yes.
It's the same lot size as that position. So if I use a 10 pip stop loss on this 15-minute, if I drop down on the 15-minute chart and it's a 10 pip stop loss, where your stop loss goes, I have a buy trade instead of using a stop loss. It's the same lot size as this sell trade. So if price pushes back up past where I would have a stop, where you would have a stop loss, I'm just buying at this point. So as the trade turns and comes back my way, I can start cutting the hedge off. Same lot size.
Okay, thank you.
No problem.
I think at the end of the day, Todd, good afternoon.
Good
We we try to complicate something that is you simplified in actual fact. And the problem is we look in and we analyzing, and then that paralysis analysis eventually kicks in. But the way you've explained it today, really, I think, yes, we need to put it into practice. And at the end of the day, it's consistency that really pays off.
I agree. Which is why I kind of wanted to give you 10 things and then how I mesh them together and pick a trade. And then what I use as a template, like this, I didn't invent moving averages. I got this from somebody, Oliver Velez to be exact. But you take the bits and pieces of what you learn, you put everything together. Everything matters, right? Whether you're a support and resistance trader, a smart money trader, a trend line trader, you can draw a trend line through here, and every time it touches your trend line, you can add position. All that stuff is the same information that you've heard over and over. You just hear it in a different way, a different manner of we present things in a different manner. But all I've tried to do is take everything that all the individual classes that we've had, stick it together and show you how it kind of flows into a trade idea. And then how you can take that trade idea, right? And you can utilize your time frames to get bigger profits. So, I used to wonder how people get all these 1 to 33 trade and all that other crap. All we're doing is you're seeing that price broke this structure. Price came back and retested this structure, right? It's going to drop. Price already dropped to here. All I'm doing is trading to this same level. I might say something different, but look, price already went down here. It's going back. It's going back. So in this move, this 142 pip move, all I have to do is get creative by dropping down the time frames to get a bigger chunk of the pie of what I already know, what price has already showed us. Price has already showed us that it's on a downtrend and it's going to go to this level. So if I just trade price back to this level, I'm going to get paid. It's not going to not do it just because I entered the trade. All I have to do is enter the trade and hold it. Samantha, there's a moving average video that I did like 2 days ago. You got to watch it. Please watch it. Simple moving average, 9 and 13. Any questions? Any other questions? Samantha, those are the questions you got to ask to everybody. There was a video that we watched a few weeks ago, and there was a guy who was doing the video. I can't remember his name. He's a successful trader. He's of Pakistani descent or something. And he was saying that it's the people that talk, the people that ask the questions, the people that don't worry about sounding foolish. Those are the people who are going to find their financial future a lot better than the ones they're in now. Because every one of us, especially me, have sat in somebody's Discord or somebody's Zoom and listened to them explain how they found the success that they've had. And it's only the people who speak up and get clarification, those are the folks who are going to be successful going forward, because you get direct feedback and you get direct information to a problem that you may be experiencing. And I can't address anybody's issue if I don't know the issue exists, right? I can have an idea of what I think you need. I prepare these classes or these sessions and I speak, but it's either going to hit you or it's going to miss you. But if you don't raise your hand and say, well, you got to clarify this, I'll never know, right? And I'll sit here and be frustrated when because more people aren't getting it. But it's, the truth of the matter is trading is a long-term and thing. It's going to take you some time to understand it. And trading is probably the most abstract thing that we'll ever do in our lives, which means we got to build it from the ground up. We got to build our rules. We got to build our system. We got to build all that from the ground up. It's very important that the things that I learned along the journey, if I can give you some diamonds or some gems or whatever, it's very important to take other people's concepts that have already been proven to work and mesh them into your trading. Because if you have to go and find and go and create concepts from scratch, it's going to lengthen the time it takes you to become successful, right? If I can take what ICT tells me and make it make sense on a chart, then it's going to shorten the amount of time it takes for me to understand what to look for. So I think it's very important that you guys take the bits and pieces. I'm always name dropping, I'm always video dropping, because these guys have awesome information. And most of the time, I want you to go to their video because you're going to get something different than what I got from that video. But all those videos are always, they've all been instrumental in my growth and my journey, right? Traders that teach hedging. Oh, that's a good question. I don't know. I got the concept from PIPS of Persia. And I just kind of had to work with it on a demo. And the truth of the matter is very uncomfortable. I didn't like it at first. But now, the further you get along as a trader, you like, dang, man, like if I had never learned how to hedge, I'd have lost a lot more trades. A lot of times hedging just saves you. And the truth is that we do it totally different. My brother hedges, but he uses it a lot different. Selena and her brother have a way of hedging. Like when they get in a position, and I think my brother, he said he did it the same way. They'll get in a position and they'll play like that position is dead, and they'll just open up a different position. I mean, that's a way to do it. I would have never thought to do it like that, but you can do it however you decide to do it, whatever makes sense to you. I have the way that works for me. You got to get a way that works for you. And this is where I can't help you, right? Because you have to help yourself. When it comes to hedging, because you have to get in there and actually on a demo account and actually do it. Get yourself caught up in a hedge, get yourself out of the hedge, or whatever the case may be. Bullish and bearish order blocks. Well, they're okay. What's that? You want bullish and bearish order blocks?
No, she was saying Tasha had her hand up.
Okay. Give me 1 second. Barbara asked about bullish and bearish order blocks. In a nutshell, here's what I think, Barbara. Anytime I get a green candle that's longer than a red candle, that's a bullish order block to me. Whether it's this doji or a longer candle, or it could be a green doji. It doesn't matter. A doji is a doji. But that's what I consider an order block, right? Wicks included. Bearish order block is when the green candle is shorter than the red candle. All this means is you have a level, right? You have a bottom and then the red candle breaks structure to the bottom. That's breaking structure. That's an order block. That's in a nutshell what an order block is. Now, a lot of people will say, oh, some order blocks way more than others. Okay, that's cool. I mean, that I don't, I don't necessarily disagree with that. But the bottom line is, if you can recognize them, right? And more importantly, if you can recognize them in a level, like this is clearly a downtrend. So any bullish order block in this downtrend is irrelevant to me. Only bearish order blocks are relevant to me, right? Then you get to the bottom, you get a bullish order block. Once this pulls back, so you get an impulse move or pullback, and this is a higher low, now the bullish order blocks are making sense. Okay? So if you can't independently order blocks, imbalances, they don't mean crap. But when you put it all together, you got the order blocks, you got market structure, you got price action, it means everything at that point. So that's why there is a benefit to understanding order blocks, and there's a benefit to understanding imbalances. But once you understand those things, you have to be able to put it together to formulate what's going on, a trade idea. If you guys look at that GCAD video I did this morning, where I talked about the consolidation, the expansion, the retracement, that stuff is super important, because if you can see the market as a breathing mechanism, right? And you understand that you're going to get the impulse move and the pullback. We don't know the time frame it's going to take for the pullback to happen, but it's going to happen. You're going to get the impulse move, the pullback. The pullback is just to fill those imbalances. And a lot of times the market will push back to where it was, or a little bit further than what it was. So if you understand that as a concept, then it's easy to understand why we trade these order blocks, because the market is fractal. And I know on this chart, we have two different candles, but really the truth of the matter is, starting right here, this is an impulse move, right? Even the part it went all the way down here, the market impulsed. Market impulse from here all the way down here. Now you get the retracement, the pullback. That's what you're seeing. That's wick on this candle is a pullback. And we're going to trade this because it's going to pull back. Where is it pulling back to? That's where that Fibonacci comes in. It's pulling back to at least 50%. And then once it pulls back, it's going to go back to where it was. That's it in a nutshell. That's all trading is. And whether you use the weekly chart, the 4-hour chart, the order block on the 4-hour chart is going to do the same thing. You're going to get the impulse move, you're going to get a pullback. And then you're going to go back to where it is. That's it. We don't have to recreate anything. The benefit that we get from trading these higher time frames is the market is definitely going to go the direction that the higher time frame order block says it's going to go. It's not going like if the lower time frame order block contradicts what you see, it's going to get ran through. And the reason it gets ran through is because if you see a different order block on this time frame, like this bullish order block, that's the run through. This is the impulse move that ran through this order block, right? So you got to understand that the higher time frame helps you be able to come down to this level and make a determination or see the market for what it's really doing. Any other questions?
Thank you, Todd.
Yeah. My question was, okay, when you're using your moving averages for like confluence for your entries on like the 4-hour, 2-hour, or lower, like on the 15-minute maybe, do you enter when it touches the moving average sometimes, or do you wait for the candle to close?
That's an excellent question. Let's talk about this. Let's say we're on the 4-hour. And before we know this is going to fall, all we see is a green candle. Because when this price opens up right here and goes up, this is a green candle, which it looks like it's going to be a bullish order block, right? So would you enter right here? I would enter right here while it's a green candle. I would look for my 100 pip move. So here's my explanation behind it. If you enter right here, and you would say, well, Todd, why are you going to enter right here when it's clearly looking like a bullish order block? Well, for one, we have the benefit of the higher time frame, right? The higher time frame is already telling you it's selling. And for two, remember, you're supposed to sell when it's buying and you're supposed to buy when it's selling. So you have a 32 pip stop loss, right? Do you want to miss a great trade setup because you don't want to spend 32 pips on it? Especially now that you know how to, as soon as it turns and starts falling, you can go down to the 15-minute and get a great, a better entry. You know what I'm saying? You can go down on the 15-minute and here's an order block right here. You can get a second entry. Do you want to miss out on this opportunity? Does that make sense to you, Tasha?
Yes, it does. I was wondering about that when I was practicing.
Mommy.
Yeah. So this would be the second entry. So this second entry in the same position, is going to give you a 3% gain on this. That first entry would have given you a 3% gain. So you've made a little over 7% with those two positions. So don't be scared just because I would say that if it moves towards that towards this moving average that you want to get in, especially on a downtrend, those are when you want to take your entries.
Thank you. That helps a lot.
No problem. Any other questions?
Todd, I have a question.
Yes, ma'am.
When you said on the weekly, if it's not a order block, you don't want to see it. What do you mean by that? If it already tapped and took off, or?
Okay, so let's talk about this. I've had so much success trading order blocks, right? Like I know 100% sure what this move is going to do. I know it's going to pull back and it's going to drop. I'm going to get paid. So knowing that, why do I want to go gamble on some other setup? If I already know with 100% accuracy, this is going to sell, right? The only way that I'm interested is when you get these moves, you know, 527 pip move, I know it's going to retrace.
Like GJ, look at GJ.
GJ probably falls in that same. No, it doesn't. GJ doesn't.
Right.
Fall.
So this one that has already, you know, it's already retraced and stuff. So
let me ask you a question.
mhm.
What is your interest with GJ? To sell it, you mean?
Yeah.
Okay, so let me ask you a question. That's
probably
kind of what I thought. You're going to sell GJ. But if you look at this monthly chart, this is a bullish order block, in my opinion, because you got a doji, you got a bullish candle, you got a retracement on the monthly that already tapped your moving average. GJ should buy. But you're looking at this weekly chart, had a bearish order block, it sold. You're going to sell this again next week?
Oh yeah, I got you.
And get your neck broke. So this is what I mean by gambling, right? So first of all, you're on the wrong side of the moving average. The moving average is below your price, so you can't sell this, right?
I mean, I wasn't really trying to look for an entry, it's just one of my main pairs. I was just looking if it fit the example of no
got you,
order
but
block.
I want to explain this for the masses, right?
Gotcha.
It's not just for you, but it's for the masses. So we're on the wrong side of the moving average, and your higher time frame really doesn't support a sell.
Mhm.
You can't sell this. But a lot of people get caught up like this. I used to get caught up like this all the time. You missed your head and shoulders. You missed your sell, right? Some people say, oh, it's still going to come down here. I'm not gambling on that, especially when this other JPY pair has already set up and told me that it's going to sell, you know, on that NJ. NJ already said it's going to sell. It has a beautiful setup that offers a great range of pips to the downside. So it's a better setup. We have to recognize when our setups are good and when our setups are bad. This trade right here on the weekly chart, it moves 772 pips. It's going to retrace. This is a better setup. Even though there's no order block, it's a better setup. Because we understand how price action is. Price action means it's going to give us a wick. The wick is the buy move. You hop in there first. That's your first move of the week to collect that wick. You make your money on that wick. If you don't make, let's say you make 5% on this move up. Well, you got the rest of the week to go to one of these other chart, one of these other pair to get your other 5%. Does that make sense?
Yes.
All right.
I have a question.
Yes, ma'am.
Is there a specific time? Because before I used to hear, or I used to practice not trading on Mondays or trading on Fridays because
That's the most absurd stuff I hear.
yeah.
I-
Is it like, and in your opinion, from what you've observed with the current
what I think
days,
is,
like specific days they move more?
well, no, there's no such thing as a day that it moves more. Okay, maybe there is somebody that keeps statistics doing that, but I'm gonna tell you this. You as a trader, we have to be there when the move happens. Okay. And let me just show you. I can show you better than I can tell you. There are some people that say they don't trade on Sundays and they don't trade on whatever day, but I've made my 10% on Sundays a lot, right? But I always talk back about on Thanksgiving last year. It was Thanksgiving last year. This is the week. So it had to be this week. This week right here, this big red candle.
Mm-hmm.
This is the Thanksgiving Day move. Some people would tell you they don't trade on Thanksgiving. This is the night. This happened Thanksgiving night right here. See, it says, this candle says Friday. Anything after Thursday at 5 o'clock in the afternoon, East Coast time, is a Friday candle. This move happened that night. 10,000 people move. The market 1,000 points on Thanksgiving. So you could have been the person that said you don't trade on Thanksgiving. I trade when the market moves. I think it's very dangerous for people to say they don't trade on Sundays or they don't trade. Trade when the market moves. Trade when your setup shows itself. Any other questions?
Leandra hand is up, Todd. I don't know if she has a question or if she just got her hand up by mistake.
Yes, ma'am. Leandra. Somebody.
I got
Or mute your mic. Hey, somebody asked me what time a day I trade. I trade I trade when the move happens. Last week I was trading 1 hour after market open. This week I'll be doing it again because I'm going to try to catch this UJ move when the market opens.
Hello. Oh,
Yeah, what's up, man?
sorry, my mic's not been working. Do you know when you went back on your demo, on your demonstration, and you fibbed on the 15-minute time chart, and you got your optimal trade entry for the 15-minute entries?
Well, I think I fibbed on the 1 hour.
Yeah, you on the 15 minute as well.
Okay.
But you did also fib on the 1 hour and the 4 hour. So you're on the 15 minute. How did you work out where to fib on the 15 minute? Was that equivalent to a 4 hour candle that you fibbed on the 15 minute?
No, if I fibbed on the 15 minute, I was fibbing a 15-minute move. The market is fractal. So whether you're fibbing a candle or an actual move, you know, it's going to work out. I don't remember fibbing on that 15 minutes, so I can't really pinpoint what you're referring to, but it was probably a candle. If I was looking for an entry on the 15 minutes, I probably fibbed the candle. So if this
just one candle, it was the move you fibbed and you got the entry. Yeah.
Was it a move? Okay, well maybe it was the move. If it was several candles, then I was actually fibbing a move that was either on the 1 hour or the 4 hour. I was just on that 15-minute time frame. So
okay.
I'm gonna fib this move right here. This is gonna be on the monthly. On the monthly, this is gonna be a candle, and you're gonna get a pullback, right? So it just depends on if you're fibbing more than one candle, you're fibbing a move from a higher time frame.
Yeah, I know that. That's why I was asking you on that 15-minute marker of the fib, was it equivalent to like the 1 hour?
Yeah, more than likely
to like the 4 hour. That's what I was asking.
Yeah, well, without knowing or without remembering which exact move you were talking about, it was either the 1 hour or 4 hours, probably the 1 hour.
Okay. And know how you said to go down 2 time frames, but you fibbed up on the 1 hour?
I think I explained that. So the reason why I used that 1 hour instead of going down 2 time frames was because when the market opens tomorrow, there's going to be 1 hour where we can't enter, right? Do you know why we can't enter? We can't
because the
enter
spread's so high.
Yeah, because the spreads are so high. So all I was trying to do is react based on what the market did in that first hour. And because it shot up, I figured that it would pull back. So I filled that 1 hour candle to see where I could get an entry of it pulling up. It's the same thing that's going to happen tomorrow with UJ.
Mhm.
And Rachel, I'm going to answer your question while I address this. When I say I trade when the market opens, tomorrow afternoon, I don't know where you are in the world, but I'm in New Mexico, but tomorrow afternoon at 5 p.m. Eastern time, well, actually, it might be 4 p.m. Eastern time now that time went back. The Asian session is going to open, right? And then that first hour, there's going to be some admin moves and price is going to do something, right? But right after that, directly after that, I'm looking for a buy entry for this move going up. So that's what I mean when I tell you I trade when the market opens. It depends on which move I'm looking for. What I tell you guys to do, the beginners, is to wait until you get the 4 hour order blocks, right? Till you get the 4 hour bullish order block, and then you can get in. For the people who understand how to use the time frames better, you don't have to wait for 4 hours. You can get in a little bit earlier on a lower time frame. Okay. But if you're a new person, don't get FOMO. Use the 4 hour order blocks. They're beautiful. They help you. You're going to get your percentage, trust me. The fib levels. That's a good question. I'm going to defer the fib levels to the guy I got them from, J Take Profits. Go to J Take Profits. Type that in the YouTube search bar, J Take Profits. You can type in J Takes Profits Fibonacci video. It'll come up. He'll give you the settings on that video. And you know, the reason I don't mind shouting people out.
And that's the thing about Tom, you said during the only time you necessarily wouldn't trade, and it's because of the spreads, is when the market, that 1 hour when market opens on a Sunday, the first hour, and daily during like 5 o'clock when it's closed.
Yes, that's
when you can't trade.
That's accurate, but
okay.
I've gotten in trades before during the spread. You know, it just depends on what you're looking for. But I would suggest you wait until it closes. I'm not paying 1,000-point spread. You know, like if I've gotten into some bad spread trades, it's on these USD pairs because the spread sometimes isn't as high as those other ones. Any other questions? All right, good folks.
No, there's one more question. It's in reference to entering those secondary positions as price approaches the moving average. You know, you're anticipating price is gonna, you know, bounce off the moving average and continue up or down. And you got your hedge position set above or below, you know, 20 pips or whatever that number may be. Your hedge gets activated. Let's say price is turned around, you don't know it yet. I mean, at what point do you say, okay, price is turned around, I need to trade it the other way?
Okay, so let's walk through the scenario. Let's pretend that we're getting this area for a buy. You enter for a buy, it activates your hedge and the selling, right? Now, you're gonna wait for the price to pull back and to retest your hedge. That's at the point that you know it's gonna push away and sell. Now, I know this is a weekly chart, but if this is a 15-minute chart, it only takes that one 15-minute candle to go the opposite direction. This next 15-minute candle is gonna retest and push away. So that next candle should be enough to tell you what's happening. Either the price is gonna come back across, it's gonna give you a bullish 15-minute candle, or it's going to keep going bearish. And if it's going to keep going bearish, then you can start cutting your hedge and go in the opposite direction. The moving averages are what's going to tell you. It's no different than a trend line being broken when you trade retail concepts. Once the trend line is broken, your trend is going the opposite direction. These moving averages are going to turn and they're going to go the opposite direction too. So you can just sell the trade, but you need to couple that with going up a time frame, because if you do that on a 15-minute time frame, and you should be able to see a change coming on the 4-hour time frame too, maybe the 1-hour time frame. Does that answer your question?
For shizzle.
Any other questions? Any other questions? Does everybody feel like they can execute what they just saw?
Yes.
Yes.
I think everybody here is capable. You know, I would really suggest that you get in a demo and try it a couple of times, but this is definitely something that you can execute. The recording has been, I never stopped the recording. This is going to be a solid 2 hours. But I think this is something that everybody on this call is capable of doing. I think everybody has the knowledge. You know, it's just going to take some getting used to. And if you do this in a demo and you see that everything that I showed you happens in repeat, then you'll understand that you can also do this.
Hey, Todd, can I ask a question about, so for there's some new people on the call that's just starting trading, those smart money concept videos that you did when you was doing those Sunday sessions, what's the name, like what do they start with? Does it say beginner smart money in the education folder? Do you remember? Does anybody recall?
I don't remember.
Okay. Thank you, Kenya. I can't remember when it started. Ugh. But thank you.
All righty. So, gotta stop this video.